Okay, so I wanted to do a follow-up video on the trend power analysis that I was doing in Excel, and one of the other things that I felt was going to be useful to look at was the level that price moved based on the the highest amount of trend power within a trend power swing. So how far did it move based on this 1762 swing, or how far did it move based on the extreme of the swing here, which was minus 12.1. And the way I went about this, first of all, I added two columns, one for the extreme of price for trend power, so extreme high if trend power was positive, or the extreme low if trend power was in a negative swing, and then what the open was at the trend power change. Now what this means is simply the difference between a positive value changing to a negative value, or vice versa, and the open at the first change. So in this case, where it changes from positive to negative, what's the open at this price? And you can see there it was 28, and that will copy down for the whole of that swing, like so. And where it changes from negative to positive, it will do the same. So it finds the open at that point and copies it down, and this is a larger swing, and it goes all the way down to here. Now the fairly straightforward formula for the extreme of price, if you just look at that, that was just a simple if statement, a couple of ifs in there, and the open is a little more complicated, but still just using if statements. I'll give you a second to have a look at that. So what I then did was created a couple of pivot tables, one for positive trend power, one for negative trend power, and I used this to identify the number of ticks that price exceeded that opening price of each trend power swing, and put that next to the maximum value of the trend power for each swing. So you see 1762, and it went 5 ticks beyond. Next one is 3762, and it went 34 ticks beyond, and so on and so forth. But the problem, of course, is that when you're trying to analyze data, if you've got so many different discrete values, you're less likely to be able to put a good conclusion, because you can't compare, you can't make the program compare those values as easily. So what I wanted to do was I wanted to bin these values, and I did that by using some if statements, some count ifs and average ifs. So that's multiple different criterias based on the range that I've created in the pivot table. So once you've done that, and I won't go through these things in details at this point, but you can see that the average of ticks beyond the open of the trend power of each trend power swing does very clearly increase as the maximum of trend power increases, and that's pretty obvious. But what's not quite so obvious is the fact that as the maximum of the trend power increases, the average number of ticks increases more. So the trend, if you like, becomes more active as trend power increases, and you can see this by this ratio being greater, so the number of average ticks being smaller relative to the maximum of the trend power, as you get a smaller extreme in trend power. And that is useful because you can see that perhaps how likely the market is going to stretch beyond a certain point. Now, this is all very well and good. However, you do need to be able to recognize an extreme in trend power, and I think that it is fairly clear, and this is one thing that I do need to do in another video at some point. And if we go back to the data, just visually you can see that trend power, the swings are in curves effectively, so the high of the trend power or the low of the trend power for a negative swing tends to be followed by a curve down in values. So you can see 1762, and then it drops off. So as soon as it peaks, once it's dropped off, then you know that is likely to be the peak. In this case, obviously, very clearly you can see that that there's a double distribution. However, in this case, even you can see that it drops off once, and the value of the high does actually drop off quite a lot as well. Well, a reasonable amount, before then making a new high in trend power and making a new high in price. But then that new high in price is the high in price for the entire swing. If you look at that, if you look at the data, 74 is the high there. It drops off. As soon as it drops off, you know that it's likely to be the high, and therefore price is likely to decrease. However, this is something that I'd need to test in a future video. I hope this was a useful video for you though, and thanks for watching.